is my fish, Dorothy. She's also trading, you see. Oh, Dorothy, don't forget to put a stop loss. Ha ha ha. Huh? What do you say? Ah, Dorothy says she's already using a stop loss. She's a very smart fish. But she would like to know how to use a stop loss in a proper way. Okay, I'm gonna show you. After me, okay? Ooh, I'm here. I'm on my trading place, and I'm ready to show you how to use a stop loss fish. And you guys also. So we can take this example. So I think I also took this trade. Yeah, I did. So if you wanted to take this kind of position where you have a important point with approximately 30,000 on Bitcoin, you spot the resistance, which I marked based on the daily levels, which we had here, like once, or one touch point, second touch point, third touch point, so many numbers, many touch points. So we can mark this point as a support or resistance. It flips when we are under resistance. If we are above, it's support. So now it's resistance, which we get into, and then we look at the market cipher, which is the best trading indicator for me, at least, and I think you fish and you guys will also appreciate it. We have a blood diamond, which indicates, which is very bearish indicator, very bearish. Depends. Also, it depends. But here it looks like a pretty. The VWAP is pretty sharp, which indicates, which is good if we are looking for the short. It's also really tight, and it's possible that we print a red dot, which we did. So as I spot this, I went short. I can't remember if I went short from here, or if I went short from exactly from the level, because of the because the indications are, for example, here we got a pretty nice diversion in the lower time frames. Like here, the price was coming up and the momentum was coming down. So if we see something like this coming up to the level, it's really nice. Okay, so back to the point. We were talking about a stop loss. Fish wanted to know how to use a stop loss in a proper way. So if let's say we entered here on the black diamond, we put a short, and so we have to put the stop loss above the last swing high. Or if we short in from the resistance, we can also do a little bit tighter stop loss, like last swings above the line, if you want to be a little bit more risky. But normally you would put it like here, maybe here. It's up to you how much wiggle room you want to give for your trade, how much space you want to leave. But it has to make sense. Like, you don't wanna, like, if we come back above this line, your trade is invalid. So you have to put the stop loss somewhere here, right? And always adjust your position size and the leverage you are using to the corresponding stop loss you have. For example, this very very much wiggle room, very big wiggle room, 1.47. So you risk no more than 2% of your trading portfolio, which is the safest bet, because then you can maintain over time if your win percentages, if you're winning more than you're losing, because then you can maintain over time. Otherwise, maybe you get a couple trades in, but then if you start losing, it's pretty quick way down. So I don't want you to leave that. Some people have to go through. Some people have to do it hard way. I was one of them, and it's not nice, believe me. I couldn't even afford the food for the fish. It was fucking painful. Oh, I'm sorry. I didn't mean to say it, but yeah, it's pretty much like this. You can do same thing on the higher time frames and on the lower. Remember, higher time frames are usually more important and more accurate. So if there are some signs in the higher time frames, look at them more. Treat them with more respect. For example, here on the 1 hour, we can also get divergent momentum coming down, and the price is coming up. So what we do, we can enter here, or if we look on the lower time frames and spot something which indicates bearish or also another divergence, we can maybe enter earlier, but I don't know. So let's say we enter here, put the stop loss above last swing high, this or that, which you prefer, and then adjust the position size and the leverage, so you risk with 2.8% risk, approximately 2% of your account in maximum. Yeah. And see, if you're looking for the target, you want to split your take profit. You just look for the local resistance or supports. If you are shorting, you look for the support, right? Maybe here you take profit. For example, here first take profit. Somewhere here the second one, and somewhere here the third one. Or you can split it in the more, like 4, here 4, 5, or how you like. The most important is that you do split your profits, because if you don't do so, you can end up with losing credit even though you were in the profit, which is also sad. Okay, I think now you're ready, fish, to use your stop loss prepared. You have enough knowledge. Okay. But wait, fish and you guys, I would like to show you one more thing. Let me get the... okay. Fish, I know it looks sensitive, but it's for a good cause, believe me. This image is a great example of what we just learned about stop losses. You have to put a stop loss below or above a last swing high or low, depends if you are shorting or longing. if you're long, like on the image, you put it below so you don't get catched like the other fishes by a big players, so-called whales. That was amazing. I love trading. And Dorothy also loves trading. Let's sing a song about trading. Come on.
You don't know what you're missing.
Let's go.
But now you know. You're missing life-changing opportunity, confidence, vision.
I'ma buy low, then I'ma sell high. Bloody red Ferrari when you see me fly by. My brokers think I'm crazy cause I'm taking all these chances. Chances, 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 chances. I'ma buy low, then I'ma sell high. Bloody red Ferrari when you see me fly by. Brokers think I'm crazy cause I'm taking all these chances.